Rachel. I'm the newest member of the Redmonk team, which, Finton, thank you very much. I'm excited to be here. I was originally a little bit nervous because I have a background in financial analysis and not so much on the technical side. Actually, my only practical IoT experience in my real life is a multi-year battle that I've had with our Nest thermostat. But after Alistar's talk this morning, I at least feel slightly vindicated in why that might have been occurring. And we've already had a slide with a demand curve on it, so I feel like you're still my people, even if we're not going to talk code in mine. So I want to talk about the economics of the Internet of Things, and I want to hit on three main areas. I want to talk about the concurrent forces that are really working together to enable IoT ubiquity. I want to talk about maybe some quantified metrics around what that ubiquitous large market looks like. And then finally, I want to talk about some investments that are happening today that are going to shape where that market is headed. And so diving in on these enablers, I want to hit on 5 key areas. And there's definitely more, but these are the ones we're going to cover today. We're going to look at sensors, compute, open source software and data processing, batteries, and networking. And this is my favorite slide, primarily because I am starting you out with my dazzling technical slide, but also because I am excited when somebody is going to look at this without the benefit of actually hearing my talk, and they'll see that the source is Goldman Sachs, and I think that that's really a winning slide. But there's really no Moore's law specific to sensors in terms of a discrete and quantified way about how it's improving, but we have seen extreme improvements in terms of sensor capability, decreases in size, and drops in prices. And Goldman Sachs has found that a sensor that cost on average $1.30 1 decade ago is now costing around 60 cents. So big drops in prices has led to more affordable sensor use, which has led to a market which Goldman Sachs actually estimates is growing faster than semiconductors at this point. So we are seeing more and more sensors and more use cases that sensors can be applied to because they are more economically affordable. We also have compute, which is, again, Moore's law more specifically here. As it has become more affordable to do data processing and compute, both on the edge and in the data center, we have seen more and more affordable data processing. We've seen drops in hardware costs for on-prem hardware and servers, and we at Redmonk have done a lot of analysis about how base cloud pricing has fallen over the last 3 years, and it's fallen across virtually all providers. So it's becoming much more economical across the board to actually store and use our data. And which goes a lot with this next slide. It's Redmonk doesn't have very many rules. I think maybe one of them might be that we talk about open source software a lot. So open source software is a key driver to being able to do things up and down the stack and across the IoT network. It's all over the place, and it is a key driver both in terms of making it affordable to do compute and also making it developer friendly such that it can become more ubiquitous. Next area I want to talk about is batteries. Batteries are largely considered to be one of the limiting reagents of IoT development because it's very economically difficult to improve both the density and the duration of a battery simultaneously. It's difficult to get a battery that is smaller and has a longer lifespan at the same time. However, there have been a lot of signs in recent years that we're going to see some great improvements to battery production. One primary example being the Tesla Gigafactory. There's a financial analyst firm called Lazard has done a whole lot of research into power storage, and their findings is that they are predicting battery production costs to fall substantially in the coming decade. They predict a 50% decline in the capital costs required to do lithium-ion battery production, and they are similarly predicting 40% cost decreases for flow batteries and 25% decreases for lead. So as we have more production capabilities built out across the industry and as there is more sharing of battery technology, we expect batteries, at least in terms of their production capacity, to improve tremendously. And then the final area that I want to talk about in terms of economic enablers is bandwidth. And there are an immense number of ways that you can network your Internet of Things device. You have Wi-Fi, we have cellular, we have satellite, we have all kinds of ways that we can do this bandwidth. It's really hard to try to quantify that. I definitely tried, but what I came back to was another Goldman Sachs finding, which found that in the last decade, the cost of bandwidth dropped by a 40x factor. So you can't really have an Internet of Things without a network. And so as the cost of actually networking the devices decreases, it becomes more easy to actually increase where that network is available. Okay, so to summarize where we're at this first section, we have sensors, we have compute power, we have open source software, we have batteries, and we have networking. The forces that are acting upon all of these economically are driving the cost of IoT lower. And this is enabling proliferation of IoT devices. And this is going to take us into our next section, ubiquity. I want to try to spend a little bit of time going in what we predict the IoT market to look like in terms of size. So, Redmonk doesn't do market sizing traditionally, and that is a tradition that I'm really happy to continue here. But I did go through and find some consensus numbers about where people are predicting IoT to be in the next 5 to 10 years. So overall, people are predicting, if you average it out, about 29 billion connected devices by 2020 to 2025 is the range that is up here. What's interesting is if this device forecast holds, and if population forecasts hold, this means that in 2025, connected devices are going to outnumber human population 3 to 1. So that's kind of what we're looking at in terms of device size. What does that actually look like in terms of economic value? Turns out that there's much less consensus there, surprisingly, maybe unsurprisingly. Our vendors think the market's going to be really big. We have analysts out there that are giving themselves a range of 20 years and plus or minus $7 trillion. So not a whole lot of consensus coming across. I don't think that we can draw huge takeaways there in terms of what we want to come away with one number, but it will be billions of dollars. All right, so far we've talked about component economics are making IoT ubiquitous. We've talked about how it's become increasingly feasible to build out an IoT network at scale, and we've talked about what we kind of think that scale could look like. Now let's talk about where's the market, there's investors. So who's investing now? What does that look like, and how is that maybe going to shape what the market can do going forward? All right, so this data set is definitely not holistic. I want to start out with that caveat. It's a data set I found from a firm called CB Insights. It's a little bit US-centric, and it's based off of people who are investing into startups. So it's venture capitalists and firms that are investing in kind of seed and Series A rounds, things of that nature. And we've seen definitely lots of companies throughout this conference that are investing as part of their R&D budget that doesn't look like an acquisition into another company. And so I just want you to keep that in mind, that this is a portion of IoT research. Nonetheless, still an interesting data point about where investment is at. And it's actually from just January to August of 2016 alone, in just this small component data set, $2 billion of investment. And it's a fairly nascent industry. We see 50% of those dollars are coming from incubators and accelerators, seed rounds, and Series A, so early stage investment for the most part. And then if we want to look at where it's being invested, this is kind of the sectors. It might be a little bit tricky to read, but that first graph is actually consumer products at 24%. Which I think is a pretty surprising number. I think we all tend to agree that B2B is the leader in IoT adoption and is generally considered to be a larger market. So it's interesting to see C2B getting the top spot in terms of overall dollars invested. When you aggregate all the other B2B functions, it's bigger, but it is interesting to see that C2B is seeing a lot of traction in the investment community. The other thing that I think is notable from this slide is that there's a fairly diverse set of sectors that are seeing investment at this point in time. There's not all our IoT eggs are not going in one basket. We're seeing a fair number of investments across the board. And then our next look is at who's actually doing the investing. So I pulled the top 10 investors by the number of deals that are made. The number one investor is actually the ever aloof undisclosed, but so these are the top 9. And I think what's interesting here is looking at how we can kind of group and categorize these investors. So we have accelerators and incubators. We have VC investment funds, which we would expect to see, and then we have existing industry, and we have 3 of each in this top group. So all these investors may very well have similar desires for successful investment, similar criteria for what a successful investment may look like, very different motivations about why they're investing. And I think that existing industry in particular is one that we should look at in terms of what it is they're hoping to get out of IoT. And again, it's a little bit of a mixed bag here. We can't draw a firm conclusion. So what are these metaphorical Model Ts that the industry sees coming? For a firm like Intel, what it sees is IoT itself. And Intel Ventures is the only firm of these 3 that has a publicly disclosed mandate to actually focus on IoT investment as a sole solution. GE and Microsoft, on the other hand, have investment mandates to pursue things like healthcare or software. They're looking at things like business solutions, things that augment their existing product lines. So the goal for firms like Intel are actually to capitalize and grow the IoT market as a whole, which makes sense as a chip manufacturer. Firms like GE and Microsoft are using IoT not for the sake of IoT, but rather as a way to expand and maintain control of their existing business. And I feel like that might have been tremendously fast. I'm really nervous. But this is kind of where my talk is at. And I think really to sum it all up, we have economic forces that are acting upon IoT components, which are making it more ubiquitous, driving costs down. And as these costs go down, it becomes more economically feasible to pursue a wider variety of use cases. And this enables proliferation of IoT technology. So expect the market to grow substantially because of this proliferation. And there's some dispute about what that looks like in terms of overall dollars of economic value, but we do expect it to be valued in the trillions of dollars with tens of billions of devices in the next decade. And we expect the investments being made to get us to that market size to be from a diverse community into a diverse set of sectors and industries.